All right, everything looking good. Should be live and rolling. Let me know when you guys can hear me coming through. Go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8:06 p.m. Eastern Standard Time, February 27th, 2022. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So obviously, quite a lot has escalated over the weekend. Saw a good deal of volatility, not in the markets, obviously, as they were closed, but in the world in general. So a lot of people were, I think, surprised by the aggressive move up towards the end of the week, last week in our spot markets or traditional markets, stock markets, crypto, etc. We had discussed basically after the Dow sell-off had started coming in pretty aggressively. I believe it was on Wednesday. We discussed it, and we're expecting a retest of the 200 moving averages, which we basically got. A couple of the indexes moved all the way back up. A couple of them fell slightly short, but we do want to take a look at those. Let's go ahead and jump right in and get this rolling. So obviously not a lot has changed on the TNX. We see basically that, we got a pretty aggressive move back up here. Obviously this was, there was a fear trade into bonds, sold off aggressively. And then, as the fear subsided a little bit, or the reflex, rally subsided, we came back up to that level. So we're still sitting at 1.985. So basically at 2 at the top of the range. We're still essentially just sitting at the cycle high. So as far as I'm concerned right now, this still looks very bullish. For a little bit there, we consolidated and actually crossed the 200 exponential below the 200 simple. 200 exponential is back on top, and looks like we're going to get some continuation to the upside. Nothing right now tells me that we would see a sudden sell-off in rates or anything like that. At worst, I think maybe a consolidation back down to like 1.75. But overall, I would say that this is probably going to go sideways or sort of melt down a little bit, but probably just head higher. Next, we have U.S. oil. So we got a pretty aggressive move up here. That fear trade once again coming in as, obviously Russia is a large supplier of oil, especially for Europe in general. So we saw a massive push up here, try to get through key resistance, which was our green Fibonacci horizontal, and then also our ascending resistance line here in red. Every previous time we have maxed out at that ascending resistance, and every time we've come down to the support down here, we have bounced that as well. So we see a very, very aggressive candle, almost ended up all wick and just a slight body on it. Now we see here with the open that we've gotten a pushback up here. If this gets rejected again and we leave another tail behind, like over 50% of this candle in the next 24 hours, it's going to look like, to me, a strong rejection at the top of the range, which will likely lead to continuation to the downside. We see every time we've gotten the sell buy sell signal, sell buy sell signal, sell buy sell signal, every time we've left the bullish control zone, each time we have done the same thing. We have topped out, we have gotten another push to a lower high, we have topped out, we got another push to a lower high, and then we roll over afterwards. So that is what I'm expecting here. We basically topped out, got a push up here, essentially potentially to a lower high, and then roll over. If we start to break out of this range and consolidate above 98 on WTI crude oil, that can change the whole situation, but I don't think it's likely at this time. Looks more likely that we're getting rejected, and this is a last-ditch effort to try to exit positions, or basically a liquidity grab before further downside potential. VIX, obviously the VIX came all the way up to the top of the range. We saw basically that was corresponding with the bottom in the stock market. That was clearly our resistance level that we've been paying attention to in our ascending channel. We would expect, obviously the heart line acted as support. So we could easily see, the stock market continue to go back up and see this push down lower to like 24 or so. We could see this be a temporary support, but we are basically back down in the neutral area of the VIX right now. So further downside move would not surprise me, until we break down through 20 now. That is basically our support, and we have broken out of our channel into this ascending channel. So it does look like the volatility is going to be picking up steadily over time, just clearly putting in highs, lows, higher highs, and higher lows just over and over again. And I would expect that to continue on. So Dow Jones obviously got a pretty strong bounce here. This is what we were discussing. We had put in a high right here. We put in a low. Then we put in a lower high. Then we put in a lower low down here. Once we closed below this low here, that looked very bearish, as it was basically confirming a downtrend, and that we had essentially just double topped and had entered into at least a short-term downtrend. We obviously broke down from key support here in red, and then broke down below the 200 exponential and simple. So the next move that we're anticipating is we find a temporary bottom somewhere, which corresponded with bullish divergence. We have essentially a low right here and a lower low right here. And then if we look to our indicator oscillators, we have a low right here and a higher low right here. We have a low right here. And again, what looks like it's going to be a higher low right here. Or if we look at the knife, it is already confirmed. And, you know, essentially that just corresponds with bullish divergence. So the next move we would expect is once we transition into what amounts to a bear market, below the 200 exponential, below the 200 simple, both of them having a negative slope, we would expect the next move to be a push back up. And instead of buying support like we have done every other time for this entire move up here, every time we got the reversion to the mean play, the retest of the 200 or some other support along the way, it was a buying opportunity. Now we would expect that algorithms, that market makers would flip, and that they would become bearish, and essentially it would be a sell the rip situation. So we do expect essentially a pushback up as high as, you know, maybe we already topped out. Possibly we go as high as 34,515, or even all the way back to the top of the range at like 35,150. But I look at that as a selling opportunity, as at this point in time, until we reclaim, consolidate above 35,000 and reclaim these levels, flip the slope back over blue, and then start seeing continuation back to the upside. This is bearish to me. This is a confirmed bear market. And this is on the Dow. So the Dow is obviously much more bullish overall than like your just randomly picked stock from the market. SPY, we have the exact same thing going on here. So we clearly have a high, a low, a lower high, a lower low. We have some, I thought I added in some support and resistance levels, but essentially once we broke down from this key horizontal here, you know, that was a key area to watch. Once we break down through that, obviously we're able to reclaim it. But at this point in time, it just looks like that bullish retest, you know, followed by bearish continuation. So again, we've lost the 200 exponential. 200 simple is basically flat. It looks like this is going to be a pushback up. When we break through a support, we retest it as resistance. And then if it acts as resistance, we expect continuation in the direction. The same way, if we break through a resistance, we come back down, we retest it as support. And then if it holds as support, we would expect continuation to the upside. And that is referred to as an SR flip. We're flipping support into resistance, or flipping resistance into support. And, you know, that's what it looks like to me. So IXIC, NASDAQ, we broke down from that key support here in green. Obviously put in a lower low, again confirming a downtrend. Get a pushback up here, very much confirmed already into a bear trend, 200 exponential and simple. Both sloped to the downside. We got the majority of the breakdown move, which is from our neckline here to the top of our pattern here. So we had a clear support here in red. When we lost that support, we retested it as resistance, and then we essentially got the majority of that measure move down. We already hit our 236 key Fibonacci level here in green. Next target is the 382. But before that happens, it would not be unrealistic to think we come back up here, retest that breakdown level in red, potentially even 200 exponential and simple. But I do expect continuation to the downside. And again, the volatility is telling us the same thing, painting that same picture. And Russell, once again, same thing. We broke down from a key level. We came down to 236, tested it as support. It acted as support. We got a lower high. It acted as support once again. We put in a slightly higher low here. So now we need to see, are we going to be able to come all the way back up and get that retest of the breakdown at 21.29? We were unable to get there the previous time, and then it rolled back over, but we did put in a slightly higher high, higher low, I'm sorry. So maybe this time we come back up, finally get the pushback up to 21.35. It lines up with the 200 exponential and simple, depending when we get there, and then we could potentially see that rejection play out. But at this point in time, you would expect the 236, the key fib level, to act as some sort of support, and then continued distribution to take place. It's very clearly a Wyckoff type 2 distribution pattern, you know, basically with a throw over or failed breakout. And then when we break down, we are unable to reclaim the highs of that range, we break down from it, and then we have the last point of supply. So that's essentially what this is, our last point of supply before we break down to lower prices. So, is that last point going to top out at the bottom at the previous support and act as resistance? Is this going to be the last point of supply? We don't know. It's going to be somewhere in this range right here. But again, if we're unable to reclaim levels above 22.31, or at least at the absolute minimum 21.32, the Russell is going to look worse and worse and worse. And we know the majority of these companies do not look good. I mean, this is 2,000 companies publicly traded, and most of them are zombies. So if we know that rates are going to be rising, almost with certainty, nothing is completely certain, but going into the future, we can only assume rates will rise from zero, where they're at right now, to somewhere higher. So if these companies are unable to be profitable at zero rates and the absolute best optimal conditions to run a business and be profitable, how in the future will they ever be profitable at higher rates? It stands to reason that they won't. Therefore, this index is clearly overvalued, and probably a lot of the companies that are in the index will bleed out and come off of it. And then, potentially some that are well managed, better companies will move in and take their place. So XLE energy sector. So again, just bouncing, trying to do the same move as oil is, but we really need to see a higher high and reclaim the 821 to get continuation back to the upside. We have a sell by sell. We have a bunch of red histograms. This is our first green histogram, but we're still very much below the blue slope line, and we would expect this to essentially roll back over. I would prefer to see this take place with some pretty clear bearish divergence. We do have, basically a low here or a high here and then a higher high here. But we see, if we look at the actual stochastics, we have a high here and then a lower high here. So we have a slight bit of bearish divergence on the actual stochastics, but not so much. Oh no, I'm sorry. We have bearish divergence rather on the okay. Slight bit of bearish divergence on the stochastics from this point here to this point here, but does not correspond with the TJD, TDMACD. I typically like to see the two of them line up and then the 821 cross. So we're seeing a little bit of divergence, but not strong. XTN transportation sector. So again, bouncing the bottom of the channel, came all the way back up to the top of the channel, a retest of the 200 exponential and simple. We would expect this to now act as resistance after breaking down below it. Now, in the event that we can get a breakout of this channel, we could potentially expect a measure move. I'm just stealing that arrow because we don't need that anymore. We could potentially expect to get a measure move of the channel from the bottom to top. So assuming that we just broke through the 200 exponential and simple all of a sudden on Monday, and we got that measure move up, we would retest the top of the range and, potentially take us back up to like 98. I don't think that that's probable, but it is always possible. An XLF financial sector. So we have broken down from our key ascending support here in blue. Again, we started to form a series of lower highs and lower lows, perfectly respecting these levels as of now. So we have come back up and retested the heart line of that channel, as well as our blue ascending support. We would expect it now to act as resistance. While we still have a overall bullish posture on the 200 exponential and simple, the 200 simple is clearly above the 200 exponential. So it is showing some clear signs of weakness. But this looks like it will probably get rejected and roll back over to me. We'll have to wait and see, obviously. And at this point in time, there was some discussion or questions about, everything going on and, talking about fundamentals and what's likely to happen and how things will play out, and trying to counter trend trade the market, or trade the news, or buy the rumor, sell the news. It's very, very difficult to figure out how the market is going to react because there's so many factors. I think the key with these markets is the market tends to focus on one thing at a time. So the market has been very focused on inflation, for some time now. Now, so the Fed meeting has been the most important thing. Now the market is focused very much on Russia and Ukraine. So that is where their focus is at. So as we approach, the Fed meeting again and get, new inflation numbers or whatever the market will focus on next, that's what we would expect it to move off of. So while there's a bunch of factors going on, it's always like the most recent or most relevant that the market looks at. But it's much easier, in my opinion, to try to trade short-term technicals, not try to trade short-term fundamentals. because the fundamentals can literally shift in a day. If you try to base your trading bullish or bearishness off of news articles, to tell you the truth, you're probably just going to get chopped up in the markets, because 1 minute everything is extremely bullish, 1 minute everything is extremely bearish. I mean, think about what happened with the stock market. It was Fed can't raise rates, everything's extremely bullish, going to the moon, and then it was Fed has to raise rates, too much inflation, and then next thing you know, it's 50 basis point hike and 12 hikes this year, and then all of a sudden, 3 days later, it's 3 hikes and 50 basis points completely off the table, maybe no rate hikes. So the market can literally switch from extreme highs to extreme lows very quickly. And that's why the volatility index is so important, the VIX, because we see now that the swings we're seeing in the market is literally from extreme highs to extreme lows. There is no middle ground. Nobody's saying, well, we're expecting probably 3 or 4 rate hikes, most likely 25 basis points. And then we get an inflation print, and then they're like, yeah, we're probably leaning more towards 4 now and still 25 basis points, and then all of a sudden, that subsides and inflation numbers come down, and it's like, well, now we're leaning towards, maybe 3 again and, 25 basis points. No, we're seeing the complete opposite. We're seeing companies or, influencers or, whoever come from 3 rate hikes at 25 basis points to 9 rate hikes at 50 basis points. Like, we're seeing complete swings in the opposite direction, even seeing, companies or big banks come out and literally say the opposite 2 days apart. Somebody's coming out from the bank and saying an extreme positive, somebody's coming out from the bank saying an extreme negative. I mean, if you try to trade off of the news, you get completely chopped up, and you're always going to be one step behind, because the truth is, if it's coming out on the news and you're trying to trade off of it, the move has probably already played out, because typically you're the last one to know. So VWO, Vanguard FTSE Emerging Market ETF, again, broke down to that key level of support here in blue, reclaimed that level, and is now just sitting at resistance. This was previously support, these 3 touches down here essentially, and now we're at resistance. Could we push back up here to that 50 level, run into the 200 exponential and simple, run into the top of our, descending resistance? Definitely a possibility. That is obviously a much stronger level of support that we would expect to act as resistance. But again, the 200 exponential and simple are very much sloped to the downside. This is not good. This chart looks terrible to me. Very clearly in a bear market, just waiting for a reason to let go. Here was our reason. Now, we did get bought back up immediately after that, off of essentially like that, positive news, or essentially it's like, oh, thank God there's a war, so now the Fed can't be aggressive. That's basically what the market said. Basically, the market said, okay, there's a war now, so Jay Powell can't be a complete hawk. But there's no confirmation. Jay Powell didn't come out and say, hey, I'm not going to be as hawkish, or I'm not going to raise rates, or anything has changed at all. It was literally just the market's perception of what Powell can do based on, Russia's influence on the world, a potential war between Russia and Ukraine, and then, potential sanctions or changes in energy prices, etc. So none of this has anything to do with the actual factor. If we're saying Jay Powell is the factor, and he's going to determine if markets are going to go up or down based on what he does with the Fed funds rate, well, Jay Powell didn't say anything. So this is literally just aggressive speculation in one direction or the other based on what people think Jay Powell is going to do. So Powell might just be, sitting there saying, well, nothing's changed for me. Or maybe he is saying, oh, I can't raise rates now. Or maybe he's saying, you know what? I'm going to break the correlation. I'm going to break the back of inflation. I'm going to break the markets because they're counting on that Powell put. So I'm just going to go super, super hawkish and extra aggressive. We don't know what he's going to do. We don't know what he's thinking. It's complete speculation. DAX. So obviously seeing a pretty aggressive breakdown on the German ETF. Obviously they're directly affected by what's going on now, with Nord Stream 2. Now they've come out and said they're not going to certify Nord Stream 2. They obviously are relying on, even though they're not actually getting any energy from Nord Stream 2, the fact that they were potentially going to be getting energy from it, but now they're not, because they're probably not going to do the inspection and they're not going to approve it. And so therefore, they're seeing a more aggressive move to the downside. Again, complete speculation because nothing has technically changed. They didn't just all of a sudden say, hey, we're not going to get any more energy from Nord Stream 2. They already were getting no energy from Nord Stream 2, and now they're continuing to get no energy from Nord Stream 2. It's completely built. It's full. It's ready to go, but it's not actually pumping anything yet because it hasn't been, the inspection process hasn't been completed. So everything is still exactly the same. So again, heavy speculation to the downside based on nothing, heavy speculation to the upside based on nothing. And when I say based on nothing, I don't mean that, what's taking place between Russia and Ukraine is nothing, or them not, certifying or inspecting Nord Stream 2 is nothing. I'm just saying nothing has technically, changed one way or the other. Like if you literally put, your gas pump in your car and you were pumping gas directly from the pump before, and then something changes and the pump is still in the car, but it just stops pumping, or it's still pumping, and then somebody else walks up with a can and says, hey, I'll sell you this can of gas cheaper, and then you're about to buy the can of gas cheaper, and then all of a sudden they're like, oh, you know what? Actually, never mind. And then they walk away. Nothing actually changed. You're still getting your gas from the same price. You're still paying the same price for it. Nothing has actually changed. You were going to potentially get a deal on this gas or change the source of your gas, but it never actually changed. It was just about to change, potentially going to change. You were thinking about changing it. You were looking over the gas can and you're like, this looks kind of shady. The dude trying to sell it to me, he looks a little bit shady. So maybe not a great idea to buy this gas or whatever. That's like what's taking place. Nothing has actually changed. The source of the gas hasn't changed. The price of the gas didn't necessarily change. Nothing changed technically. It's just a speculation of what's about to change that the markets are moving on right now. So, call them forward looking, call them jittery, call them whatever you want to call them. But as far as I'm concerned right now, I think more likely than not, this is a reflex rally back up. And then we see this roll over and continuation of the downtrend until something changes. We've very clearly been in a downtrend now, for months. This topped out in June of 2021. So we've been very clearly in a downtrend for months. Got an aggressive sell-off in a confirmed bear market. So any move back to the upside is just going to look like another opportunity to sell. Every single push up here was an opportunity to sell at a slightly lower high. So again, if we push back up here, the higher we get, until we start violating some of these lower highs and start putting in higher highs, basically taking out like 33 or potentially like 33.80, something like that. I mean, it's just going to look like another lower high, another exit pump. CN50 China. So we see China had the least, move up or down here, but is basically just sitting at support. So we know that the longer we sit at support, the more likely we are to break down from it. Very clearly in a bear market on the daily, does not look good. And then finally the UK 100, obviously had a pretty aggressive move back down to 200 exponential and simple, had a very aggressive move back up from it, and then sold off pretty heavily. But, we're seeing that get bought up fairly aggressively for now. The initial sell-off and volatility that we're seeing right here is not good in my opinion, but the fact that it is, at least as of now, getting bought up fairly aggressively is definitely a good sign. We have to see how this prints. I mean, if it prints a, big rejection of lower prices, that will look good because it's like, okay, we tried to push it back down again and lower prices got rejected. If we just see a bunch of volatility and a bunch of volume come in on this candle and then, it closes back down here at something like 7365, that to me looks bearish. We don't want to take out more than 50% of the candle in front of it. So the same way that this was a bearish candle and then this was extremely bullish because we engulfed it, if we basically sell off from this and take out at least 50% of the previous candle, that looks like a bearish rejection and likely to continue back down to retest the 200 exponential and simple. But we will see what happens from there. There's so many crazy macro and, internal factors as well for all these different countries, as they'll all be affected differently. What's going on, Breaks 212? Good evening to you, my friend. Lazy boy, good morning, brother. Good to see you. Good to see you. Appreciate you guys. Let's keep on rolling through. So DXY is next. Obviously seeing continued strength in the DXY. I know this thing was supposed to have gone to zero by now. I know the dollar is supposed to be so weak, but the truth is we had a long in-depth discussion about this on a recent stream. Essentially, before everything went down with Russia and Ukraine, we specifically talked about how I wouldn't want to be in the UK because Brexit and everything going on over there. We talked about why we wouldn't want to be in Canada, investing wise, or even there, because of everything going on with the truckers and freezing bank accounts and this, that, and the other. So, extreme volatility in Canada, extreme volatility in the UK, and now we're seeing, Europe, obviously, crazy stuff going on between Russia, Ukraine. We obviously see that's going to affect, potentially like Germany and France and a lot of other countries as well. So if the main components of the DXY are obviously the dollar versus the euro, the pound, and the Canadian dollar, if that's the three main components and they all look like shit, why would the dollar be weak? It literally makes 0 sense. It makes no sense for people to call for a weak dollar, on the DXY at least. Call it compared to asset prices. But don't say the dollar is weak compared to these other three things, because they also all have like massive geopolitical issues going on right now, not to mention like actual economic issues and like, legitimate problems. So to me, anyone speculating that the dollar is going to weaken in comparison to this basket of currencies, one, doesn't believe in technicals, and two, doesn't believe in fundamentals. So if they don't believe in technicals and they don't believe in fundamentals, I guess they're just calling a psychic hotline and talking to Miss Cleo, or maybe like, if their dog lifts its left leg up to pee, the dollar is bearish, or if it lifts its right leg up to pee, the dollar is bullish. I don't know. Maybe it's some sort of mythical magic. They're lighting some candles and, seeing the direction of like the sage and the smoke in the room. I don't know. Some mythical shit that I don't understand, because the technicals and the fundamentals clearly point towards a strong dollar. Clearly. I literally can't even think of a possible comparison or anything, fundamental or technical, that would tell me anything other than that. So, fantasy, I guess, hopefulness. So Tesla obviously had that push back up. This is our first breakdown below the 200 exponential and simple. So what do we expect? The reversion to the mean. This is, I say it a million times and I'm going to say it again. I know it's super redundant, but when the trend starts to flip from bullish to bearish or bearish to bullish, the final trade I usually take that is the last bullish trade or the first bearish trade, if we're transitioning, is the reversion to the mean trade. So if I was bullish on Tesla the whole way up, every time we retest the 200 exponential or simple, or every time we bounce a key moving average, if I'm bullish buying the dips, the final bullish trade I take is when we break down from the 200 exponential and simple, the reversion to the mean trade. That's the retest of, basically our what was support acting as resistance, the SR flip, the push back up and attempt to reclaim the trend before we continue lower, or vice versa in the other direction. So this is the final bullish trade that I like to take on these markets. We were expecting it. We talked about it in advance, and here it is. So wherever this tops out at, if it doesn't top out above 863, Tesla's going to start looking really bad. And, let's be real. There's a lot of price action trading between, basically this peak here and essentially down at like 550. But between, 900 and 550 is a pretty big difference in price action. And, while there was a lot of volume taking place, who's to say this isn't just a bunch of distribution taking place and this is just a throwover on, the top of a distribution pattern? It wouldn't surprise me at all to see Tesla back down here very quickly in like that 500 range, or possibly even much lower. Now, I don't hate Tesla. I think Elon Musk is a genius. I love his troll skills over 9,000. Like, the dude's freaking hilarious. But let's be real here. Tesla doesn't look good. It looks better than most things, but it doesn't look good. It's clearly below its 200 exponential and simple, and this looks like the reversion of the mean play to me. Intel still looks terrible. Obviously got a pretty aggressive pushback up here. Very, very weak, clearly in a bear market. Nvidia had a nice pushback up, attempt to save the 200 exponential and simple. Got back on top of it. 200 simple looks like it's ready to cross back above. 821 still crossed to the downside. Again, same thing here. We do see some bullish divergence showing up on our indicator oscillators, with a much lower low here on that gap down and then push back up. A lot of this is essentially to close gaps as well. But I do expect an eventual rejection on these things. We can easily flip back bullish again if we have some sort of technicals telling us to, or fundamentals even telling us to. But as far as I'm concerned, nothing has changed. Not for the good. Not for a positive. And I know there's like, a lot of old sayings and stuff that people like to say, buy on the bombs and sell on trumpets and all that stuff. But, it's all about predominant trend. if we're in a bull trend and, you know, there's a massive sell-off, sure, you want to buy the dip. If we're in a bear trend or beginning a bear trend and there's a massive rip, you want to sell that rip. So yeah, sure, you could buy the dip, but is the dip just the reversion of the mean trade like we're expecting it to be? Or is it going to be back to higher highs? Because to me, it just looks like the reversion of the mean trade. Netflix looks terrible, just hanging on to support. Looks like it's basically going to consolidate here. I would imagine probably range bound between 411 and basically like this ascending yellow support here. So I would not be surprised to see it chop around here for a little bit. Maybe try to push back up to the upside, but I think this rolls over and goes much lower. But we did hit the measure move of the breakdown of the channel. So Apple back towards the top of the range, got a perfect bounce off the 200 exponential and simple and nearly tagged our red support. What was previously resistance, we would expect to act as support at least the first couple times we touch it. You know, obviously much stronger than most things in the market, but not overly optimistic on this one. Amazon, same thing, bounced the bottom of the range, you know, essentially like a double or triple bottom back here. I would expect they push back up to the heart line of the channel. Again, very much in a bear trend, 200 exponential and simple slope to the downside. I would expect this to just roll back over. You know, we have some clear highs back here, and then since then, we have just seen weakness. We saw basically a bounce back up to like the 50% portion of like the sell-off. So here we see that same bounce again. I would expect it to go less high or be less aggressive back to the upside, and then eventually less volatility, and then eventually a break. So we have Google with basically a double bottom right here. We got a very clear top right here. We have a very clear double bottom right here, retesting the 200 exponential and simple, retesting that what was support as resistance here in yellow. Same thing, just watching this to see what happens. We see a little bit of bullish divergence here. We'll have to see how this plays out. But again, one of the stronger players in the market, essentially holding up these indexes. Microsoft, same thing, another retest of the neckline. Again, push back up to 200 exponential and simple, where it clearly, you know, we get in a super aggressive candle up like this. And then you would expect, if this was going to continue to be bullish, if this was anything but a dead cat bounce, you know, an oversold quote unquote rally, you would expect continuation at least a half, maybe a third the size of that little pushback up here. But instead, no momentum. I mean, it moved up like $2 the next day after this massive rally back to the upside, this huge pushback up. So is this just a reversion to the mean play and then consolidation before it rolls over? Or is this just some massive rally and now we're going to new all-time highs? I would say, judging by the size of this candle after a gap down, after an aggressive sell-off, I would say this is probably just a reflex rally or, you know, an exit pump. You know, we don't see any other big green juicy candles like that anywhere. I don't see them if there's any on here. So is it likely that this is just, you know, Microsoft just super bullish and ready to go to the moon? Or is this, you know, quote unquote manipulation so that someone can exit their position at a higher price because they don't want to take a massive loss on a huge Microsoft position? I mean, I would say probably that. Or even if they have a massive gain, they don't want to give back a chunk of that gain. So there is a couple of random topics I want to talk about on tonight's stream as well. Obviously, you know, you guys see the title and everything, talking about a potential bullish catalyst for the markets. And then I want to talk about this wage price spiral situation as well and sort of debunk the idiocracy that is a wage price spiral. So obviously we're seeing inflation all over the world, you know, because of quote unquote money printing, or, you know, whatever you want to say, supply chain issues, lack of supply, increased demand, or lack of supply and same demand, or lack of supply and also demand. But we know that there is one fixed, you know, issue in all of that, which is lack of supply. There's no denying that if you try to get stuff, it's harder to get stuff than it was 2 years ago. So supply chains, getting supply is clearly an issue, whether it's supply of labor, whether it's supply of goods, whatever it is. So supply is clearly an issue. There's obviously also some increased demand in different goods because instead of buying goods and services, people were just buying goods because they couldn't buy services because everything was closed and they weren't allowed to leave their houses or go out and buy services. So obviously we see a lot of goods inflation. You know, and then here in like the United States, there was inflation and people were struggling. So, you know, genius administrations decide that they're going to help out poor people which is great. That's awesome. Help out poor people. Amazing. Help to get people out of poverty. I think that's a fan-fucking-tastic idea. I really do. This is not sarcasm at all. I really think that it's a fantastic idea to help people that are struggling. But helping people that's struggling is not giving them handouts. So we have like food stamps or like welfare here. So if all of a sudden you say, okay, everybody that's poor and already can't afford stuff, we're going to give you 25% more food on your food stamp card. What is that going to do? It's literally just going to increase the price of food by 25%. So, what came first, the chicken or the egg? Did food inflation already start because of supply chain issues or because of money printing? And then it got worse because of, digital money printing in the form of government handouts? Or was supply chain issues the problem and was going to go away, but now it'll never go away because now you get 25% more on your food stamps? I mean, you can argue up and down, but in the end, we know that supply chain issues were 100% a factor. And we know now that it will never go away because unless we fix those supply chain issues and also add a larger amount of food going into the future to drive down prices, that we're never going to see that 25% increase that people get on their food stamps that is causing further increase in prices or maintaining those further increases. We're never going to see that go away because we know governments never decrease programs or very rarely do. So we know for sure that food inflation is going to be entrenched, at least in the United States. We know that. I would bet money on that. We will never see food prices down as low as we did in the past. And if we do, it will be over a prolonged period. And probably things are going to really, really suck if food gets cheaper, because one of two things is going to happen. They're either going to have robot fake food that they make and we're all going to be eating paste, that's made out of God knows what, or there's going to be extreme poverty like all over and everyone's going to be super poor. So the price of food is going to go down because nobody can afford to buy it. So either one of those is terrible. So I think the likelihood of either one of those things in the near future is very unlikely. I think very high likelihood is that food stays expensive. And then when we see things like, massive net exporters of like wheat and corn, aka like Ukraine, having issues, probably going to be less food to go around. When we see like geopolitical tensions, or we see, climate change issues, or whatever you want to call it, causing problems, extreme droughts or hurricanes or whatever the situation is, and that's potentially destroying crops, probably food's not going to get any cheaper. So I think necessities are going to continue to go up in price. And I think random shit that people don't need or that people speculate on are going to deflate. So I think we're going to see a lot of asset bubbles coming down in the next couple of years. And we're going to start seeing, necessities continue to rise and go up more and more. And, think about it right now. The same people that were saying there is no inflation are now saying help the poor out. And then everybody gives a bunch of money to the poor to help them out and stimulus checks and all this. And now there's massive inflation. And now they're like, do something about the inflation. You got to give the poor people more money. So that's literally, where the idea of the wage price spiral comes from. So you just, basically people have more money to spend. So they go out and spend that money on the things they need. So the businesses that sell those things are not making enough money or need to recoup some of their additional costs from labor or, transport or manufacturing or whatever. So then they raise the prices of those goods. So then the people that are buying those goods are actually employees of that business or other businesses. So therefore they need more money to afford the goods. So therefore they ask for a raise. So then the business has to give them a raise again. So then the cycle just continues and prices just go up indefinitely. And, eventually prices just go through the roof and there's massive hyperinflation and no one can afford anything. And, then we need Bitcoin. Sure. Okay. That's one scenario that's possible. Or anyone that's ever owned a business knows for a fact that the way it works is, you have to provide a certain amount of value to a business in order to be worth hiring. And essentially what the minimum wage is basically just the minimum amount that you have to be worth to be legally employed at a business, right? Because if I have to pay you $10 an hour, okay, and my profit margin is, say, 10%, that means that after all my costs and everything and paying you, you have to generate at least $100 worth of sales for me to just break even on hiring you. So if you can only generate $70 additional in sales for my business but I have to pay you $10 an hour and I only make 10% profit margin, I have to either increase my prices to raise the amount of profit that I'm getting by hiring you, or you're unhireable. I have no reason for you. You're useless. You're a useless human being as a worker. So that's where the choice comes in. So minimum wage, people are like, oh, minimum wage, you got to pay people more so they can afford to live. Well, minimum wage is actually the minimum that you have to be worth to deserve a wage from any business. Not because you're a bad person or you're not educated or no one likes you or, you're a less valuable human being. No, it has nothing to do with that. You could be a great person. You could have an awesome personality. But if you're a physicist and I need someone who can make latte mochas at Starbucks or whatever, and you don't know how to do that, and you can't help me generate money for my business, you can be the best physicist in the world. It doesn't do me any good. I can't pay you that minimum wage. So it doesn't mean you're not worth that money. It just means you're not worth that money to my business. So again, if you have to pay people now, that same situation, I'm making 10% profit margin on my business. Now I have to pay you $20 an hour. What happens now? You have to provide substantially more value to my business or it's not worth me hiring you. So if I have to pay you $20 an hour now and I'm still only making 10% profit margin, you now have to generate $200 in sales in order to be worth it for me to have you as an employee. So when people talk about wage price spiral and how things are just going to spiral out of control and hyperinflation, no. Because there literally comes a point in time when as a business where I'm like, okay, it's not worth it anymore. Like I now pay you $20 an hour and now instead of doing $100 worth of sales, I'm now doing $150 worth of sales. It's no longer worth it for me to have you as an employee. So that now the other people that are working there have to provide more value to make up for the lack of that employee. Or, we hire illegals or someone under the table. So the government through mandate causes normal people, business owners and employees to become criminals through mandate because now I can't afford to pay you that. So then somebody else comes along and I say, well, I really need some help. Maybe I'll pay this guy under the table. And then he comes and works for me under the table. So now the employee is a criminal. The business owner is a criminal. The government now no longer is getting taxes on that. And now there's a normal person out there who's not a criminal, that's not getting a job. So it has all types of negative repercussions on like the economy, the government, we're turning regular people into criminals just so they can feed their families or continue to operate their business. And I mean, I'm no offense to anybody paying somebody under the table or whatever, but it is illegal. It's illegal to get paid under the table the same way that it's illegal to pay people under the table, which, if you don't think that that's like a real thing that the government is worried about, well, why all of a sudden is the government so concerned with inflows and outflows of people's bank accounts? So now businesses like PayPal or OnlyFans or other payment processors now have to report to the government $600 or less or $600 or more in annual inflows into your account because they want to make sure that they're figuring out how you're getting paid under the table, not working a regular job anymore, so they can still get the taxes from you. So they know they're driving people to alternative sources of income or wages or jobs or survival or whatever you want to call it. They know they're doing that. They know for sure. And they're like, well, how do we fix it? And they're like, sir, we could get rid of all the bullshit mandates. No, that's a terrible idea. We're not going to give up control. What else could we do? Well, we could just make extra mandates and make sure that we, monitor the people and, the on and off ramps. Oh, that's perfect. So we'll just, cause their banks or institutions or payment processors to forfeit that information directly to the IRS so we can go after those criminals for not reporting that income. But who created the criminals? And maybe they're not even criminals. Maybe there's lots of people that have those forms that were already reporting or whatever. But, it's presumed that people that were making under $10,000 a year through these alternative payment processors in the United States were not reporting, or else, they wouldn't need to go after them to make them report. So, again, not saying you're a bad person or anything like that, but legally, whether you were making $600 or $10,000 or $100,000, you had to report that income and pay taxes on it. So nothing has really changed. It's just now, instead of the government trusting you to pay your taxes on that, now they're just going to make sure. They're just going to, look over your shoulder and make sure you do, which is, that's fine. I mean, do I agree with taxes? That's a whole different conversation. Do I agree that if the law says that you're supposed to pay taxes, you should pay taxes? Yes, of course. I don't think people should be criminals. Whether or not the laws are just, whole different conversation. But through mandates, through policy is where this comes from. So that wage price spiral is total bullshit, because eventually it gets to the point where you can't provide enough value for it to be worth it. So now there's two choices. I either figure out a way to pay somebody without that issue, or I just don't have that employee. Maybe I close my business altogether. And that's the type of thing that's not good for GDP. So sure, prices might go up for a little bit, wages might go up for a little bit, but they're not sticky. And then eventually what happens in the market is, if there's nobody willing to work for under $20 an hour, and then I close down my business, and then there's less jobs, and then after a while the market slows, the economy slows, GDP starts to go down, and then all of a sudden it's like, well, shit, I can't find a job for $20 an hour anymore because I can't, provide business. So let me see if I can get a job for 18 or 17 or 16 or 15. And people are like, well, raises are sticky. Once you get a raise, they can't take that away from you. Sure they can. Have you ever met anyone before that worked at a job for years and got paid like a nice salary, and then they trained someone, and then after they finished training them, their job was like, hey, we got to let you go because you just trained Jane and she's going to do the job for 30% less than you? I mean, everybody knows somebody that happened to. Most everyone probably knows a ton of people that happened to. It happens all the time. It's super, super common. Super common. You train someone and then they end up being your replacement. Happens literally all the time. So I don't want to hear anybody say that, once you get a raise, it never goes away. It's total bullshit. It's garbage. Christoph says corporations plan to print meat 3D. Oh yeah, for sure. They're definitely creating some lab meat or worms or bugs or something. Real meat to be liquidated. It would be very expensive. Yeah, I mean, they're already like, the whole like ESG mandate thing going on here. It's like, oh yeah, everything's got to be clean. We can't hurt the pigs that we're slaughtering. We got to do this, that, and the other. I mean, there should definitely be some sort of middle ground between efficiency and like, being humane for sure. But where is that middle ground? I mean, it's a big gray area somewhere in between. Everybody's got a different ground. But yeah, I mean, the future is definitely going towards them trying to feed us like alternative meat sources from a paste or whatever. So let's keep rolling on here, do a little more TA, and then we will talk about, matter of fact, let's talk about our commodities. And then I want to talk about the bullish case for crypto, because there is a potential macro case for crypto with everything going on in Ukraine, Russia, China right now. So gold obviously had a pretty aggressive, sell-off or rejection of higher prices here. We see it trying to push up again. So far, it looks like it is going to get rejected once again. We know this is obviously a key level. This was the previous top, and the tops before that is basically where price spiked up to. Those are the key levels we were watching. We already had those levels picked out in advance. We know that this needs to close this monthly above the 618. If it does, it's going to look good or better. If it gets rejected, it's going to look really bad. But it looks like it's going to get rejected and go lower. It really does. So we'll have to see what happens. But, that was obviously part of the fear trade. Bonds, energy, gold, silver, all that. So silver did reclaim the 200 exponential and simple, consolidating up here. So far looking like another rejection, though. It does not look particularly great. If we consolidate here long enough, though, and we start closing dailies above like 25, next thing is our heartline target of like 25 and a quarter. If we start closing back above the heartline, I think we head back up to like 27 to like $30, possibly finally get that breakout. Gold silver ratio. So again, we see the 200 exponential has flipped over blue. We're kind of trying to flip it over here, consolidating at or, around the 8 and 21. This still looks like a weak uptrend to me. And, what does this look like? It looks like we just released the helium balloon. It's bouncing off the ceiling. It's bouncing off the ceiling. It's bouncing off the ceiling. And eventually it just bounces lower and lower and lower. And if this area continues to hold, it probably finds its way out the window and then floats up. And then we start hitting our targets of, 80 plus 90. I think actually we already hit 80. I think our target's getting closer to like 90, 92, 93, a bunch of different areas that we have targeted, but we tagged the 382 perfectly. I think it's more likely than not we top out at the 0.5. 0.5 is the most common retrace. Charles Dow theory, 50% of the move. So from the top to the bottom, we retrace 50% of that move, which puts us about like 90. So I think that's the most likely target. For now, momentum's still in our favor. Doesn't look particularly amazing, but we are at the 200 exponential and simple. So you would expect it to take some time to kind of chop through those levels. As this is potentially the transition from a quote unquote weekly bear market to a weekly bull market on gold silver ratio. So COPX, global copper miner ETF. So we're seeing another pushback up here pretty aggressively to retest the top of the range. I would expect, I really don't want to have any expectations on this. This could go either way. This was our weekly chart. Let's flip back over to the daily. It looks like it wants to push back up here and retest the top of the range. Doesn't look particularly strong, but if the 200 exponential crosses back above the 200 simple, this could just be a consolidation before higher prices. We're essentially just chopping around inside of our range, though. We have a very clear ascending channel, and then obviously we have a top at the 0 and a bottom at the 236 right here. So, typically what will happen with this, we sell off for a while, and then we start to trend higher, and then typically the breakdown from this pattern will be to the downside. It's very possible we break out to the upside and new all-time highs, in which case I think this keeps running. But more likely than not, statistically speaking, this should break to the downside, or will more likely than not break to the downside. And the measure move will be from the top of the channel to the bottom of the channel. And then, obviously the break would be below the 200 exponential and simple, and then take us back down to revisit the lows, possibly go lower. But I mean, what could happen right here is, we have a high, we have a low. So, as long as we put in a lower high right here, we would then expect a lower low. And, that would make sense. It's just a choppy lower low. Now, if we take out this high right here, that invalidates it. We just cruise higher. The 200 exponential crosses back above the 200 simple, start looking, pretty juicy and bullish again. But we do have some bearish divergence. We're inside of a bearish pattern. I think we probably break down from here. But there is a strong case for commodities, whether it's gold, whether it's copper, that's obviously mining ETF. But, same with silver junior miners. Slightly less bullish than actual silver, still below the 200 exponential and simple, still below the 236 rather, Fibonacci. So, close back above the 236 and the 200 exponential and simple at like 1365. Going to start looking more bullish, but really we just got to start taking out these previous highs. Other than that, it just looks like a series of, lower highs and lower lows, which is clearly a downtrend. GDXJ, gold junior miners, same thing, looks less bullish than gold, obviously much less bullish. Silver miners are slightly less bullish than silver, but still below 200 exponential and simple, still just operating inside this descending channel. Until we start closing outside of the channel, really can't get bullish on this. Till we start closing back above the 200 exponential and simple, I really can't start getting bullish on this. Till we start taking out our previous swing highs, or lower highs, the routine. Can't get bullish on this. If we start to close outside of here, probably be adding to my positions. You guys know I'm already building positions in some of these miners, but I mean, I'm literally dipping my toes in them because they have looked like shit for so long and they're still very, very bearish. So, dipping my toes in miners or pot stocks is based off of, the commodity overall, the underlying. CCJ, so we saw overall nice aggressive move back to reclaim the 200 exponential and simple on these uranium stocks. So these uranium plays looking better now than they did previously. But again, we're just still seeing the same thing. High, lower high, lower high, low, lower low. We would expect continuation to the downside. Just got to stick with the trend until something changes. And most of these things are below their 200 exponential and simple. That one's slightly more bullish, but THCX, just a little proxy for pot stocks right here. And again, we were talking about, I wouldn't be surprised to see a, lower low, new low still put in. And of course we did. Got a pretty aggressive move back up, but all it did was just take us back to 886. And you guys know how I feel about the 886. We often get a reaction off of it, but it's very, very, very rarely is the 886 the bottom or the top. typically once we punch through the 786 in a bullish or bearish retracement internal, it goes external after that. So the likelihood, in my opinion, of this being a bottom, then that being a top, then us getting a new low is extremely high. It's much higher than the likelihood of the 886 being a bottom. It almost never happens like that. And same way with if it was the other way around. If we were having a bullish retrace and we got back to the 886 on the upside, I would expect it to break back through and get new highs, because it very rarely, we'll see a reaction there, but it very, very rarely is the pivot point that ends the trend. So still very bearish looking. And if we look at these on longer time frames, they look absolutely atrocious. What is today, actually? The 27th. So on Wednesday, we'll have our new monthly candle open. So that will be nice because we'll be able to revisit our monthly closes and take a look at those. So that is definitely nice. So Bitcoin futures chart. Let's talk about the fundamentals a little bit here. Hang on, I'm going to wet my whistle real quick. 2 seconds. So a strong fundamental bull case for crypto. Someone had mentioned something about, with sanctions. One of the group members had mentioned something about, rubles or Chinese yuan and transactions taking place between, buddy China and Russia, or Iran, or, whatever, any of these countries that are already sanctioned, potentially sanctioned, like just trying to do things on the low. There is a strong case that these transactions have already been taking place for years, multiple years. Matter of fact, that they may have been or are the catalyst for the strength that we've seen in cryptocurrency. I can't remember where I saw it at, but I read a pretty in-depth article and saw a follow-up interview, like, I don't even know, a year or two ago, about how the volume, the size of some of these crypto transactions likely were the type of transactions that you would see for massive, side deals for probably oil. Because of the size of the transactions, and frequency of them, etc., that they were likely, skirting sanctions or just skirting the SWIFT system altogether. So I think that we've already seen quite a bit of activity between China, between the Middle East, between Russia. Again, I don't have direct proof of this myself, but, other people have looked into it deeply. I'm sure we could spend some time, find the article, find the interview, find some sort of proof on the blockchain, whatever. Somebody could look into it. I suspect that there's already been massive transactions taking place, and other people have looked into it and already confirmed that it was happening, and that the size and volume of these transactions were likely, sanction or SWIFT skirting deals. So I think that if anything, sanctions against Russia, whether it be the banking system or, billionaire oligarchs, whatever, I think that the likelihood of them using a cryptocurrency to skirt sanctions is exponentially higher. Possibly though, if someone's transacting with China, they're going to use the digital yuan. It's possible. I think more likely than not, though, they use crypto because it's trustless. So if you're, no offense, I mean, China and Russia, they're all buddy or whatever, but you think China trusts Russia? You think Russia trusts China? Fuck no. They're like the buddies that are like still looking over each other's shoulders, like, ready to get stabbed in the back. It's just mutually beneficial friendship right now, in my opinion, because they're both in a similar situation. They're like, hey, if you distract the world with your bullshit, I might be able to get away with my bullshit. I mean, we've been talking about Russia and Ukraine for some time now before any of this played out, in the same way that we were talking about China and Taiwan. And, it was just a matter of time which one happened first. People were saying that it wasn't going to happen. People were saying that it was going to happen. I was saying that if it was going to happen, it was going to happen after the Olympics because Russia wouldn't disrespect China. And here we are. So, what's the next step? Does China go after Taiwan next? I mean, China already lightweight got Hong Kong you know, through everything that happened in the last 2 years and distraction and, you know, the cough heard around the world and all this stuff. So maybe they do. I don't know. You know, it's a little bit different of a situation because there's treaties with Taiwan. There's also, you know, no offense to Ukraine, but Taiwan is like beneficial to the world because of their semiconductor influence or creation or whatever. So everybody's dependent on them. So I think right now they basically have like, you know, the silicone, the silicone dome to protect them. We'll see. I mean, China's ballsy, so we'll see what happens. But if ever there was a time for this to go down, I mean, I wouldn't be surprised if it's soon. And if ever there was a time when these countries were going to transact in, you know, trustless digital transactions on the internet, I would say it's probably now. If there was ever a real bull case for actual adoption for cryptocurrency, for XRP, I'd say it was right now. Here's your chance, XRP. You know, but I mean, we'll have to see. I mean, does it happen? I don't know. Probably not. But if there was going to be a bull case, I think that would be it. So Bitcoin futures chart still looks pretty bad. I mean, you know, we obviously got a pretty heavy rejection of lower prices, which is good. We see a couple of pretty aggressive wicks and a higher low. And then, you know, on the macro, higher low. So that's good. But we're still very much below 200 exponential and simple. Very much just got a rejection off the reversion to the mean. 821 still crossed to the downside. Trying to build momentum to the upside. But, you know, while we basically just go sideways to down, doesn't look good. Doesn't look great. And we can look at a longer time frame. On the weekly, still looks pretty bad. Very much postured to the downside. All red histograms. You know, very much bears are in control. And then, you know, we're coming up on our monthly close here. So let's look at our monthly and see what that's looking like. I mean, we broke all the way down to the 21. This was the first time since we went into a bull market that we retested the 21. We closed at the 21. We have a very clear rejection of higher prices. You know, this candle closes tomorrow on the Bitcoin futures chart for the monthly. So, you know, we're basically closing at the open. So we opened right here, pushed all the way up. It got rejected off of the 8. And now we're right back at the 21. So is it more likely now, after we clearly got rejected, is it more likely now that we just, you know, sit right here for a little bit or kind of bounce around or break down? I would say yes. I think it's very, very high likelihood that we come down here and retest 34,700. All red histograms. Bearish divergence on the monthly, bearish divergence on the weekly. A clear rejection of what could have been a bullish posture. You know, we saw the blue Stokes trying to curve back to the upside and then just a pathetic rollover. I mean, crypto looks like, it looks like there's nothing left. It looks like it's getting ready to literally roll over and die. This looks like a pretty clear double top on the monthly. I mean, we can make up whatever we want now and say, no, it's still bullish because of this. It's still bullish because of that. But, I mean, at some point in time, reality has to set in. 200 exponential and simple, postured to the downside on Bitcoin Bitstamp chart. 821, postured to the downside. You know, again, we have a rejection of lower prices here, which is good. But is this literally just whales buying up prices so they can continue their distribution before a massive double top plays out? I mean, that's what it looks like to me. This looks so toppy right now. And everybody's like, no, we didn't get the spike high. We didn't get the blow off top. Sure, we got the double top instead. So this is a blow off top and then a meltdown. This is a blow off top and then a meltdown. And there's only one other way things top out. You know, like a rolling top or a rounding top or, you know, a double top. That's what it looks like to me. I mean, it looks like a top. Looks really, really looks like a top. You know, bearish divergence on the weekly. Bunch of red histograms. Bears in control. Below the 8 and 21. I mean, it looks like we're coming down here to retest 31,800. The daily close, weekly close, on the Bitstamp chart. Potentially next target being the 200 exponential. 26,300. After that, 20,600. Let me clean up this chart a little bit and let's delete the short-term stuff. We don't need this stuff. It all already played out. Let's look at what could potentially be playing out. So we've been talking about the, oh no, well that's fine. We don't need that either. We've been talking about the 5-wave, Elliott wave count. And in that count, this was a request from group members, so you probably have already seen this before, but I just want to reiterate it a little bit for one of them. So this was our top, the one of the first 4-year cycle in with the red line right here. This was the bottom, the 2 in green here of that, 4-year cycle. So this is a 4-year cycle basically playing out. And then next we have the 3. So this is our first Elliott wave. Second is a correction of the 1. The third is our next bullish wave and also another 4-year cycle. And that's our 2 tops. And then time cycle analysis projects the third top out into the future for us. The same way that we have 2 bottoms right here, and then it will project our bottom for our third cycle into the future. So we then get the 4, which is the correction of the 3, and then of course our 5 right here, which lined up perfectly with the 1.618 Fibonacci extension of the top right here. So if we take our top of the 3 and we take it down to the bottom right there, we know we can project out into the future our Fibonacci extension target, and the 1.618 is exactly where we topped out right here. So, which is where we expected to top out. We planned to top out. We discussed potentially topping out. So at that point in time, now that we've completed the 5-wave structure, the next thing that we would expect to happen is, based on Elliott wave theory, we would expect this bottom right here to this top right here, Fibonacci extension, Fibonacci retracement, first to the 236, confirm that we have topped out and we are in fact going to go lower. Next to the 382, which is our green box right here, and takes us down to the 200 exponential on simple, which is around like 21,200 or somewhere around there. And then after that, probably closer to the 0.5 or potentially 618. We know the previous 2 waves topped out between the 382 and the 0.5, and at the 382 exactly. Or no, it might have been the 236. I can't remember now. This one was between the 236 and the 382. The second one was exactly at the 382. The 3 to 4 retracement. So if we did the exact same thing again, it would have us topping out here or bottoming out here at 21,100, which is still higher than our 0.3, which is good. And then at that point in time, everyone would get bullish for continuation back to the upside. But then all of a sudden, the macro Fibonacci retrace of the entire 5-wave structure goes into effect. And that's where we fib from all the way at the bottom of the 5 waves to all the way at the top of the 5 waves. And then we retrace one of our targets to the downside of those 5 waves. So the initial minimum target to the downside, if we're correct, and that was a 5-wave Elliott wave structure playing out, is the 236 of the macro. And that is $5,660. So if this Elliott wave 5-wave structure theory is correct, and Bitcoin has just had the completion of its 5th wave, we would expect the minimum retracement to be the 236 of that 5-wave structure, which is $5,660. So that's what we would expect to happen. Now, if we're going to look at this and say, okay, well, we got from our top right here, or from our bottom right here to our top, and this was actually the top. And then what we're seeing here play out is an expanded flat correction, which technically is, with the expanded flat, we actually technically see an A, a B that actually goes slightly higher than the high of the 5. And then we see a C wave correction after that. The C will exceed the A to the downside. So that will potentially take us down to our target right here. And then within that structure, what we see take place more often than not is smaller waves. So we would see an A, a B, and then a C that makes up that. And then again, on the next wave back to the upside, we see an A, we see a B, and then we see a C that makes up that. And then for the final wave to the downside, we actually see 5 waves to the downside. So we see potentially an A. Oh, I might have grabbed the wrong tool. Sorry. I need to switch tools there. So then we go to our 5-wave tool right here, and then we see the A, the B, and then, or I'm sorry, the 1, the 2, the 3, somewhere, potentially lower than that. We don't know where it's going to be, but then we would expect the top of the 4 to come back up no higher than the bottom of the 1 on a long time frame. And then we would see the completion to the downside. So this was kind of sloppily drawn, but if we draw from the actual candles, like the wicks, it's okay for the 4 to retrace back into the 1 on a wick, but not on the bodies and not on a longer time frame. So maybe on the daily, this 4 pushes back up and retraces slightly into the range of the 1, the bottom of the 1. But on like a weekly or a monthly time frame, we don't want to see this 4 higher up than the 1 or the close that makes up the bottom of the 1 right here. So the maximum retrace, if this is the correct count to the downside, if this is the correct count, it could definitely change. We could be incorrect about the way this count is playing out. It could also be something like this. It could be like this, and that's the 1, that's the 2, that's the 3, that's the 4. And then, you know, here's our 5 going to come in right here. That's still technically possible, because if we look at where the 4 is, it does not come higher than the bottom of that. That is definitely a possibility. And then it bottoms out right here, and that was our 5. And it just took us down to the 200 exponential and simple. That is definitely possible. But we know that it will typically exceed the low of the A of the macro retracement of the expanded flat. So either one of those is a potential situation to take place. But after that plays out, then we see the continued correction of the entire 5-wave structure. And this is just an expanded flat correction, you know, after the 5 waves to the upside. So, you know, with Elliott Wave, you can identify patterns, you can project targets with Fibonacci extensions and retracements, but you really don't know 100% until things are actually playing out. But we know that the more times they do things like respect the rules of this, the more likely it is to play out. So as far as I'm concerned for right now, this still looks very valid. And, you know, we've been discussing that since back here, because when we topped out, I said I didn't think this was the macro top. We had triple bearish divergence, and then we started to sell off, but we did not tag the 1.618. And if you go back and watch my videos, I literally said over and over and over again, algorithms, bots, market makers, whales, whoever is in charge does not like to get that close to hitting the target without hitting it. They will wait, build up strength again, and then push all the way back up and then trap people in a position. And that's exactly what we did. We had triple bearish divergence here. We had triple bullish divergence here. We got out of our position here. We got into a position here. And then we got back out of our position here when we tagged the 1.618 perfectly. And since then, we have seen nothing but just extreme weakness. Now we have bearish divergence on the weekly and the monthly, both. And now the expanded flat is playing out correct, exactly like we said from way back here. So everything that's happened over the last, 6 months at this point in time, more than that. When does this go back to? We peaked out here back in April. And I said after we put in this lower high that I did not think that was going to be the macro top. That was in May. So that was in May of last year. So almost for a year at this point in time, we've been correct, and this has been playing out just like we predicted in advance. So far, nothing has changed my mind. If anything, it's just ensuring that, what we think is correct with this ABC and then ABC, that's exactly 2 parts of the expanded flat. And then this 5-wave structure right here. Now, again, the count could be down to here, down up to here, down to here, up to here, and then just go down one more time and it ends. Or we could see, a larger correction like this. Either one of those would be fine and be completely valid. But regardless, if this 2 is the top right here, we know that whether that was the 1 and then that was the 2, that was the 3, and this is the 4, regardless if this is the 2 or the 4, we know it's probably topped back out. And then we're either coming down to finish the 3 or finish the 5. So the question after that is, once we get down to 200 exponential and simple, once we, take out that level, where do we go from there? And then we know typically that if we take from the bottom right here to the top right here, we know that the standard correction to the downside on that is, let me just double check. I don't want to tell you the wrong thing here. I believe it's the 1.618 is the standard correction for that. Give me 1 second. I just want to verify because I don't want to tell you the wrong thing. And then you run with it. Yeah, so expanded flat correction patterns subdivide into 335 internal wave patterns. Waves C tends towards the 162 or the 1.618 Fibonacci extension length of wave A. So if our wave A is from here to here, the 1.618 Fibonacci extension target would give us a target to the downside of 16,400. 400, which potentially lines up with either the 200 exponential or simple, potentially lines up with some of our other levels as well, the longer time frame, 200 exponential, the weekly, etc. So if this is technically the 1.618 would be right here. Could it be slightly higher at one of these levels? It could. You know, it's not a exact science all the time, but typically that's how it plays out. And then oh, okay. And then the final part of that, the final rule of that is typically a flat correction wave will usually target the 50% retrace level of the previous move. So that means that if we start looking at the 50% retrace from the 4 to the 5 right here, which is our fifth wave of the pattern itself, if this is an expanded flat of that fifth wave, we know that's going to target the 50%, which the 50% is 13,000. The 1.618 is 16,000. So a likely target would be somewhere in between that range right there. Now, granted, we have a bunch of potential targets to the downside, depending on then if we start to correct the entire 5 waves, etc. But we have to just take it one step at a time. You know, we can't project stuff out so far into the future that we get hooked on the idea that Bitcoin is going to 1 million or 300,000 or whatever. So now we're just going to hodl. I mean, that's not technical analysis. That's not trading. You know, that's just hodling. That's just investing. That's buying a dream. And, you know, that's not how we make money here. Number one priority for us, protecting our principal, protecting our capital, you know, taking profits and not giving anything back. Because every step backwards makes it so much harder to go back forward. You know, we always talk about that, how losses are exponentially more damaging, you know, to your net worth than wins are. You know, 50% drawdown. If you lose half your money from $100 and you go down to $50, you now have to make a 100% move back to the upside to get back to the $100 even mark. Because 50% has to go up by, or $50 has to go up by 100% to get back even at $100. So losses are exponentially more damaging than gains are beneficial. You know, depending on the percentage, the higher percentage drawdown you take, the more X's it takes to get back to even. I mean, if you suffer a Cathie Wood and you take like a 75% drawdown, if you have a $100 stock and it goes down 75%, it's at $25 now. So now that $25, just to get back to $100, you have to have a 4X. You have to 4X your $25. So when Cathie Wood says we expect, you know, compounded gains over the next 5 years of, you know, 15% or 20% minimum, well, sure. So after losing, you know, 50% of your fund, if you can compound gains at 15% per year for the next 5 years, you're like going to be break even. Like, that's not even good. But, you know, that's sort of an in-depth look. We can continue to develop this chart as we go. Keep kind of watching, seeing what's going on. But as far as I'm concerned, nothing has changed here. But that's essentially where I see us on this 5-wave structure. Either potentially at, you know, we have topped out the 2 and we're in the process of the 3, or potentially we have topped out the 4 and we're in the process of the 5. But we know that typically the expanded flat will overshoot the bottom of the A. And then, you know, obviously we know the 1.618 target or the 50% target of the actual move itself. So Ethereum, I mean, there's really no reason to look at these altcoins right now because they're basically just waiting on Bitcoin. And there's really no reason to even look at Bitcoin right now because Bitcoin is basically just waiting on the stock market. So at this point in time, we might as well just look at stocks and we'll just call Bitcoin another stock because that's basically what all these are. Ethereum is in a bear market trying to put in a higher low. We see mixed divergence and no divergence. So, you know, but overall, can't cross the 821 back to the outside. Can't be bullish until we do. Bitcoin dominance chart is essentially just consolidating above the 821. We now have the blue slope line here. We're at the 0 line with all green histograms. We have a bullish posture on the weekly here. The 821 look like they're going to cross up. It looks like Bitcoin is getting ready to shoot up to 45% market cap dominance. Or market dominance, not market cap dominance. Well, same thing really. So crypto market cap still looks terrible. Still just trending down, hanging out at support, getting ready to break. Next target to the downside is 1.27 trillion. Same thing, just looks very, very bearish. No life out of this. No life. Solana, we got that aggressive move down here. Got bought back up fairly aggressively. Pushed back up. Could not cross the 821 back to the upside. Could not reclaim a key fib level. Looks like we're just going to head back down here lower and probably tag our $72 target. At which point in time, maybe that's a buy. I mean, we see some bullish divergence here, but we see no life out of these cryptos. They're just hanging out in limbo, waiting for daddy to say, how high to jump or how high to drop. Matic, again, same thing, just hanging out at that 0.5. Still looks very likely we tag our $1.13 target. AVAX, Avalanche, just still hanging out at the same level. Again, aggressive buy up off the 786, previously tagged 886 and almost like, basically got like a almost double bottom situation here. Doesn't look good. Still just operating inside of a bearish trend. Trying to do something, but just, none of these can do anything. They're literally just paralyzed right now. KDA, Kadena. This was another member request. I don't know anything about this at all, but we will take a quick look. So just for an internal retracement from the top here to the bottom right here, we can look and see, obviously still just putting in lower low after lower low. So no reason to think that we're not just going to come down here and put in another lower low. We very much have a bearish trend in full effect right now. Matter of fact, if we just kind of drag this out a little further, it basically looks like, our heartline resistance right here basically just looks like the resistance we have to break above. It's below the 200 exponential and simple. 200 simple is still technically angled to the upside for now, but it looks like at this point in time, it's just waiting to come back down here to retest the lows and then probably go lower. And in all reality, what are we looking at? Realistically, probably this is what we're looking at. Yeah, that lines up pretty good. Let's get rid of our fib just for clarity. So it looks like we're just operating inside this channel right now. We have three pretty clear closed touches on top. We don't have a clear bottom over here, but, just by going off this bottom right here, we can see the heartline interaction here, a little bit of resistance through here, but clear support here, and then clear support right here. So if we break down from the heartline, we're going to target the bottom of the channel around $3.31. If we push back up here, we're going to expect to top out around $7.85. And we're at like $5.91 right now. And, there's really no reason to think this is going to do anything different than Bitcoin does. So if Bitcoin looks bearish, this probably just going to be bearish too. And last but not least, DraftKings. DraftKings had this descending wedge pattern. Basically bounced from the bottom of the wedge back up to the top. At resistance now. At key Fibonacci retracement, 618. Trying to reclaim those levels. Still very bearish. Triple bullish divergence off of our peaks or troughs. So if this does get ready to break out here after just getting absolutely beat down and just completely massacred, basically just going to zero as fast as possible because it's clearly trash. The measure move to the upside back to the 382, possibly reversion to the mean. It never really got one to the 200 exponential and simple. Could DraftKings shoot up to $34.50, $34? Maybe some new acquisition, maybe some new announcement, maybe some just great news. We just got the earnings report, and that was pretty good, and it's just been getting absolutely murdered since the last earnings report. I don't know. 47% move to the upside? Possible. Still looks like total trash, though. Basically just retrace the entire move to the upside. So, I don't know. We shall see. Like, but we got all the customers. We're making all the money. But we're not profitable. We're not technically making money, but we're creating income. But that is it for today. That is everything I had for the stream. Obviously, we are doing streams every Sunday, Wednesday, and Friday. So our Sunday and Wednesday streams, 8 p.m. to 10 p.m. Eastern Standard Time. And then, of course, our, Friday stream, 11 a.m. till 1 p.m. Eastern Standard Time, 11 a.m. So morning around noontime Eastern Standard Time. But that is all I have for today. So appreciate everybody tuning in. Thank you all for showing up. And definitely make sure to smash up those likes, those subs. CW says, snap the neck on your like buttons, broskies. That's right. Snap that neck, smash it, smash your head against it, smash your dog against it, whatever you got to do. Just make sure when you're done, when you leave this stream, that you hit the like button. Don't smash your dog. Dogs are cool. Oh, definitely don't smash your dog. That's weird. But anyway, that's it for today. Crypto Trend Trader with our Sunday evening market look ahead. Everybody protect that capital this week. Definitely expecting more crazy volatility. It is 9:30 p.m. Eastern Standard Time on February 27th, 2022. Crypto Trend Trader, and I'm out of here.